You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome to the Option Block. A little bit of a truncated show in store for you today. Have, been doing the show for a long time, 700 plus episodes. Sometimes interesting things happen, including the inability to pretty much get anybody on the show or get the live stream going today. It just seemed like the combination of the weather and some technological gremlins sneaking in there to conspire to deprive you of your live Option Block. I do apologize if you were out there trying to listen live. I know we had some people in there who wanted to hear the show live. We tried to get it to you. We usually do. Once in a while, the magic of technology conspires against us, and we are unable to make that happen. But, we're trying to get you something a little bit fun here today, and what we're doing is going to do a little bit of a quick, we usually do on Mondays, usually do a little bit of the old mail block. So even though I can't have any of my buddies here, any of my fellow all-star panelists here on the show today, we thought we wouldn't deprive you of your mail block section after all. So let's get to it and answer some of your questions. Of course, we also ask you guys some questions. I'd like to turn the tables on you guys as well. This week we asked you perhaps the most important question in the history of our network. We pride ourselves on doing a lot of great investigative digging into the world of options and uncovering great things, great truths and untruths in the world of options. But this goes above and beyond. We truly have outdone ourselves this week with our question. Actually, not our question of the week. This is our kind of weekend options break poll, which is we asked you guys little fun off-topic poll here. Celebrate the return of Jean-Luc Picard to the captain's chair. We thought we'd ask you, who's your favorite Trek captain of all time? And turns out we have a bunch of swarthy heathens in the audience, because 47% of you right now are coming into Showtime here choosing Kirk. Only 40% going Picard. I'll forgive you on that one this time, just this time. But yes, 9% for Cisco, 4% for Janeway. Perhaps, indeed perhaps, the most important poll we have ever done in the history of our network. That's saying something. We've done a lot. Fast forwarding to our actual question of the week, we asked you guys about those puts you guys are all obsessed with. Today coming into the show, we saw the markets rallying. We saw VIX selling off, VIX cash down to about 11 1/4. And our old friend VXX, we asked you several weeks ago if you thought it was going to break the 30 handle. A lot of you did, but unfortunately it didn't happen until today, when it sold off down to about the 29 and change level out there. So for all of you who had the week after the end of the August 3rd Friday, which of course was too far for a poll, we didn't have that, then you win. But c'est la vie, we didn't have that in our poll here. And we asked you this week, though, VXX continues to sell off. And many of you we know just from your feedback, are fascinating with the ongoing saga that is these VXX Jan 10 puts. Open interest over 200,000, well over 200,000. Thousands continue to trade for a penny. 1,000 lot going up today. Maybe that was the meatball. I'll have to ask him on the next show. We asked you guys quite simply, would you trade these things? Yes, you'd buy them for a penny. Yes, you'd sell them for a penny. No, these things are just gambling, or you have enough you have enough VXX puts. So far, early voting here. It goes to the rest of the week. Get over at options if you haven't done so yet. 52% saying yes, you would buy those for a penny, which kind of, excuse me, pretty much is what I expected from you guys. 14% saying no, or excuse me, yes, you would sell them for a penny, which is interesting. If I had to go one way, I know which way I'd lean, and it wouldn't be selling them for a penny. Come on, guys. 24% saying no, it's just gambling. I could see that. And then 10% saying you have more than enough. I probably could fall in that category as well. I got a few of all sorts of fun VXX things in my back pocket here for a rainy day. Speaking of a rainy day, it was not, before we get to your questions, actually, it was not a rainy day in July for the options market overall. We saw July, actually, numbers coming in from our friends over there at OCC, and July was a pretty robust month, actually. Overall volume over there, pretty strong. Remember, they clear a lot of stuff over there at the Options Clearing Corporation. And their total cleared contract volume in July, 374 million contracts, up 15% from July of last year. Year-to-date ADV is up 21% to about 20.5 million contracts. We like the options portion, obviously, so let's drill down a little bit. Exchange-listed options volume, 367.5 million contracts in July. That's up 17% from July of last year. Equity options volume, total of 333.2 million. That's up 20% from July of last year. Let's drill down a little bit farther. Cleared ETF options volume, 126.2 million contracts, 11% increase. Index options, one of the few black spots on the record this month, down 6%, 34.3 million contracts in July. The real dark spot, though, continues to be the dark spot out there. Pretty much the only really bad one is the futures. OCC, they clear pretty much VIX futures, a little bit of Bitcoin and some other stuff, but pretty much VIX futures is the lion's share of the futures they're clearing. VIX futures down 43% from July of last year to about 6.4 million contracts. So overall, year-to-date ADV in the futures is down 23.3% from this time last year. I think pretty much easy to determine kind of what's been driving that, fortunately or unfortunately out there, depending on your viewpoint. The demise of XIV clearly having a pretty big impact out there. All right, let's also pay off. We asked you guys last week, a little flash poll going into vol views. We asked you on Friday, will VXX finally break 30? 21% said heck yes. 58% coming in saying heck no. You guys are pretty savvy. It turns out it didn't happen until today. And 21% saying what the heck is VXX? If I have to ask you then, what shows are you listening to? If you're listening to our network, you're voting in our polls. You got to know what some of these names are. All right, we also asked you with earnings season in full swing last week, which names going to dominate your trading this week. If you don't see your favorites, send in your names. You guys sent in a bunch. We gave you 4 choices: Apple, Tesla, GoPro, and Cibo. It was a hot and heavy fight between Apple and Tesla at the end of the day. Apple took it 47%, 37% for Tesla, 10% for Cibo. Cibo getting a little bit of love towards the end there. GoPro coming in last, 6%. All right, let's see. We'll do a couple of questions here, then we'll wrap up this little truncated option block episode for you. We'll come back to you later this week with a full episode, I promise. We got Imhad1 asking us, is HMNY, that is Helios and Matheson, a.k.a. the parent company of MoviePass, are they now the most option-like stock ever? Back to 8 cents after reverse splitting up to 14. Crazy. Who would buy an option on this thing? Well, if you recall, we did actually talk about HMNY not too long ago. Excuse me, someone wrote in about a couple of months ago, I think, with a question about this one. At the time, the stock was around 62 cents. Seemed pretty cheap then. Coming into today, where are we looking now? Now we're looking, whopping 8 cents, up a penny. So up 19% today. Not a bad day. Why were they rallying today? Well, they've had, MoviePass, has had a bunch of issues. They first were going to raise the price, which was people, and again, curtail your access to the movies you wanted to see. Everyone thought was kind of a head scratcher. Raise the price, make the program less valuable. They've kind of dialed that back. Now they said they're going to keep the price the same. They are still going to make it less valuable, though. They only can see 3 movies a month now. So it used to be unlimited, 1 a day. And then they realized, they kind of did the math and said a certain small percentage of hardcore people are churning up all our money. They say to them about 15% of their subscriber base has been, quote, stressing the system. That's what their CEO said. So they want to get rid of those 15%. They want to jettison them. And they figure the rest will just keep blithely paying $10 a month to see 3 movies a month. And this is my favorite part of this article. This quote is from the CEO. He says, "I should have accelerated the process of reducing the burn faster in hindsight. And now I realize no matter how patient investors say they will be, they never are." Of course, they recently had a 250 for one reverse stock split. Got up to about, I think, around the $14 range. Let's see how high did it get. $14.30, actually $14.98. And then, of course, back down to 8 cents. So it was a very short-lived reprieve in terms of stock price. They were doing that, of course, to avoid being delisted by NASDAQ. And it's fortunately, it didn't really light them up today. So who would trade options on this thing? That's a good question. And there really are not a lot of options printing anymore because not being listed anymore because it is effectively a stock itself, 8 cents. It is an option. Still somehow 465 contracts hitting the tape today, which is interesting because I'm having a hard time even pulling up the chains here, which goes to say something about how much activity we're seeing out here. It's averaging, like I said, it was averaging 17,000 contracts. I think that's a bit of an old number, 17,800. These look like they're probably dated because only 400 some odd hitting the tape somehow today, and not a lot of new issues really coming out for HMNY. So crazy. Who would buy an option on this thing? I'm with you. The stock is an option. If you want to throw a couple $100 away, maybe you never want to see again, then yeah, you go buy a couple thousand shares. Why would you buy a call that expires in 3 months for a couple of cents when you could buy the stock for a little more than a couple of cents? So yeah, too bad the Viceroy's not here because he would probably find that all sorts of terrible. Let's see, we can squeeze 1, 2 more here. Duffy wants to know, how do we handle the fixed time aspect of trading options? Well, I think it kind of depends which way you're coming at it. If you're a premium seller, like a lot of in our audience, that fixed time aspect is something you like, you embrace, you look forward to every day ticking by because that's where you're making your income. You're making your income from the theta, the time decay. So that's kind of your friend. And watching that erode is kind of what you're in the game for. On the flip side, the long premium side, it's a little bit different. Time decay is now your enemy. It's working against you every day. Our old friend Don Schlesinger used to say on Vol Views, options die a little bit every day. And there's something to that. They do. They erode a little bit every day. It sounds a little bit dire saying it that way. Remember, he comes from the hardcore premium selling camp. But still, if you are long premium, that's kind of where you really have to get into the theta, the decay mitigation strategies in order to really offset that. How do you do that? Well, a lot of different ways. I mean, the easiest way is to set it up at the outset. So you have a spread. So now instead of just buying an out-of-the-money call, you think the stock's going to rally, or an out-of-the-money put. For hedging, you buy a spread instead. That immediately reduces your outlay. And so now your exposure to decay has been minimized. You have something that's decaying along with the thing that is eroding. Usually the thing you bought is closer to the at-the-money, so it's going to erode faster. But still, all said, that leg will do it. And then you can get into all sorts of different ways. There's a good portion of the options industry is out there every single day looking to answer this exact question. How do you pay for your decay? How do you offset your decay? How do you pay for your outlays for these names and protect that outlay? And so you've seen people go to elaborate lengths. You can do collars, of course, which is another leg beyond just the put spread. Now, of course, you have a put. You can have a put and a covered call, and that, of course, is against your long equity. And then you kind of reduce a lot of your outlay. You have a put spread with a call kicker, covered call kicker. That's what the Swan folks do with their DRS. You could play with the terms a bit. You could push the long leg out pretty far, like the Swan boys do, 2 years. I prefer a little bit shorter. I prefer about 6 months, somewhere in that, I think, 3 to 6 month time frame is optimal, given all the data I've seen on time decay and how it kicks in on different levels there. But to each their own. But so I think somewhere in that 3 to 6 month time frame for the long leg is good. Having near-term short legs against it, so kind of legging into a bit of a diagonal. Now you're buying, let's say, a 6 month, 5% out of the money put to hedge your underlying, and then you're turning around and selling maybe a 1 month or even a weekly. If you're active and aggressive, 10% out of the money put against that and doing that week in, week out over time, it should, if it's done well and the market conditions are favorable, it should offset some, if not all, of the cost of that put. And so then your decay is not as much of an issue because you have other decay working in your favor. So short answer to a very long question, actually, with the answer, is that it depends on how you're coming at it. Mr. or Mrs. Duffy. And we devoted a lot of episodes on this network to this very topic. Go look at the Options Bootcamp show, go to the Advisors Option show. We talk about it a lot there. File views, option block, a lot of episodes have mentioned this topic and touched on it to various degrees. I think probably starting with Options Bootcamp is a good place for you. Some of the early episodes where we get into the Greeks and some management of them probably would be pretty helpful for you guys. All right, unfortunately, that's going to have to do it for this truncated episode of the Option Block. We promise we'll be back later this week with more goodness. We'll have Twifo on Thursday. We're also going to have probably an earlier episode of the Option Block. The guys have been whispering in my ear about maybe doing the show a little earlier around noon Central. So hopefully that works for you guys. I'm going to try that out on Thursday too, provided we get all these gremlins hunted down and tracked down and figure it out. So hopefully that works for you guys, and we'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.